We will talk about the accounting, its users, and what type of information is being given by the companies to the users. And at the end, we will talk about the different type of businesses which are being established. Starting from the accounting, accounting is to record, analyze, interpret, and to communicate the business transactions or the economic activities to the end users. Now, question arises that who are the users of this information? Now, if we talk about the users, we can categorize the users in two main categories. The users can be externals or internals. The external or internals. Now, what about the externals? External means which are not part of the organizations. Now, who can be the stakeholders who's interested in the information of the organization, who is the user of the information, accounting information? That can be the owner or creditor. Now, these both are the investor of the organization, so definitely they are interested in the information of the organization. So they will use the information of the company definitely. Apart from that, now before going further, we can differentiate the owner and creditors. Now both are the investor of the company, but when investor as the owner invests in the company, he is sharing the loss as well as the profit. So whenever a company faces the loss, that will be distributed, that will be responsible for the shareholder or owner. But when we say the creditor, it means the company has got loan from any bank or any financial institute. So company will pay only the fixed return, and the bank or the person who is going to give the loan, he will not be sharing the loss with the company. So this is the main difference between both. Apart from that, the other users can be the supplier or the customer of the companies. They can also use the information of the company, accounting information of the company, and apart from that, the government. Definitely, the regulatory authorities of the government use this information. How? For example, the government, the regulatory authorities of government collect the taxes from the companies, so they use the information. Apart from that, the companies are using the public money, so that's why the companies are supposed to submit their information, the financial statements, to the SECP, Security Exchange Commission of Pakistan. So that's why the government is also interested as an external party in the information of the company. So these are the external users of the company's information. Apart from that, if you will move to the internal users, now from the term it's clear, internal means the managers, for example CFO, CEO, the other departments can use the internal information. For example, the finance department can use the information to decide how much cash is available with the company in order to decide whether the company is in condition to survive in order to run the daily operation or not. That is the decision related with the internal management. So this is related to the internal decision. So internal management will be used for that. Apart from that, production manager can also use this information, the accounting information. The management can decide through this information that should company go for the expansion or not. This is also related with the internal decisions. So in this way, we can categorize the accounting information in two categories, the external and internal. Now, as we have categorized the users of the information, we can categorize the category of the accounting also. As the external user use the financial accounting. Which accounting? Financial accounting is being used by the external users, while managerial accounting is being used by the internal management. This is how we can categorize the branches of the accounting. For external use, we are using the financial accounting, and we know this course is related with the financial accounting, so our more focus will be on the external parties. So accordingly we will discuss the information and the decision making definitely. Though managerial accounting is very also important, but this is a separate subject and financial accounting is separate subject. Our focus in our course will be in financial accounting. Okay, now these are the users of the information. Now question may arise is that what type of information is being used by these users? If we will specifically talk about the external users. So there are main three financial statements that are being created by the companies and are being used by these users. And these are the main financial statements are, first is balance sheet, second is income statement, and third is cash flow statement. These are the three main financial statements of the company. Though there are many, but these are the basics of the main financial statement of the company. Before moving to the detail of the balance sheet, I would like to tell you about the basic equation of accounting. Basic equation of accounting, which is the assets is equal to owner's liability plus owner's security. Assets is equal to liability plus owner's security. Now, what does assets means? Assets are the resources of the company, which company owns. For example, what type of resources? The company can have cash, the company can have inventory. What does inventory mean? Whatever stock the company have, which it sells to the customers, it calls the inventory. For example, if you have a business of cold drinks and you have stock in cold drinks, that will be called the inventory, right? Now the cash, inventory, or maybe the furniture or plant, whatsoever you have, are the resources of the company, and these are called the assets. Now these are equal to the liabilities and owner securities. Now liabilities and owner securities are the sources through which we can finance these resources. We call it the resources of the company. The assets are the resources of the company, while liability and owner security are the sources through which we can finance these resources. For example, you are going to create a business. Now it requires the 10 million. You are giving 2 million from the liability and 8 million from the owner security. It makes 10. We can see that these both sides are equal. I must tell you that there is the double accounting entry system where you will equalize the both sides. When you are going to create the businesses, you require 10 million, you got cash in 10 million, and a source of funds are 2 million from the liability and 8 million from the owner security. And we have already discussed the difference between the liability, which we discussed in terms of creditor, and the owner security, where we call it the owner of the company. As liability, the company get loan from any bank or any individual, and the owner security is the ownership claim on the company. So this is the basic equation, and by looking at that, we can discuss the balance sheet. We can discuss balance sheet. Now this is the main financial statement of the company, which tells us about the financial position of the company, or you can say this gives us the snapshot of the any company for the financial position. It tells about the same as the equation, assets, and on other side liability and owner security. This will tell about the asset on one side, on right side it is the liability plus owner security. And we can see here it gives us the position of the company, that how much assets the company possesses and how these assets are financed, how much the company has the liability and how much assets are financed through the owner security. That's all about the balance sheet. It shows the financial position of the company. Apart from that, the income statement. The income statement. Now, income statement tells about the profitability of the company. The basic formula can be revenue minus expenses is equal to net income. In the same way, we make the income statement. First of all, we record the revenue. What is revenue? Whatever businesses you have, whatever products you sell, by selling that, what sales you created are called revenue. And definitely, by generating this revenue, you make some sort of expenses. So when you deduct these expenses, expenses 1, 2, whatsoever expenses you have, you can have at the end the net income. I repeat that when you deduct all the expenses from the revenue, you will be having the net income. So the income statement tells you about the profitability of the company, while balance sheet was telling about the financial position or snapshot of the financial position of the company. And the third one is the cash flow. Cash flow statement. Now, the term itself clear that cash flow statement tells about the flow of the funds. How much cash we got, how much we paid, but it categorized into 3 categories. First is operating activities. Second is the investing activities. And third is financing activities. Okay, if you differentiate and start from the financing activities, now when you start the businesses, as we talked about the sources of the funds, how you create the funds. Maybe you create the funds through the owner security, liability, or maybe from the bank you collect the loan. This will connected with the financing activities. The sources of the funds, as we discussed already, comes under the category of financing. For example, if you are getting loan from any bank, this cash flow will be part of the financing activities. Are you getting back loan to the bank? This will be also be part of financing activities. If you are paying dividend to the stockholders, or if you are issuing the stock, this is the part of financing activities. When you created the cash, sufficient cash for the company, and then you invest in order to purchase the assets. As we talked about the assets, the land, the building, the furniture, and you purchase in other assets, these are the part of investing activities. When you put cash into the asset, especially the fixed assets, this become the investing activities of cash. And the operating activities, you run the core businesses, right? Which businesses, whatsoever businesses you possess, you sell the products and services. Now, the revenue generated from it and expenses you made during this process will be the part of operating activities. Now, this is all about the cash flow statement, which tells you about the position of the cash, how much cash you collected through the operating activities, through your core operations, how much cash you collected or paid for the investing activities, how much assets you purchased in this activity, and the sources of the funds, how you created those funds, when you get back those funds to the intended users from where you got these loans or from where you created these funds. This is related with the cash flow statement.